Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
As of Wednesday, the euro rose by 20 points, postponing the consolidation below the 1.1632 level to a slightly later time. Possibly, today's candle will close below support, since the ISM Services PMI for August is expected to rise from 50.1 to 50.9. However, the optimistic scenario may be disrupted by the release of ADP data on new private sector jobs. The August forecast is 73,000 versus 104,000 in July. Following the Trump scandal with the Department of Labor Statistics Bureau a month ago, this data could increase market volatility. The upper boundary for this volatility is the MACD line at 1.1735. It's a blue line on a graphic. It's possible the data will be neutral and the euro will continue consolidating above the 1.1632 level. The question is, in what range will the market prefer to await an eventual Fed rate cut? For now, that range looks like 14.95 and 16.32. On the 4-hour chart, euro growth was stopped by the MACD line. It's a blue line on the graphic. The Marlin oscillator, on its first attempt, couldn't break out into positive territory. Thus, we wait for 2 days employment data with the euro likely trading within a 1.1632-1683 range, the latter being yesterday's high.
And we're starting with pound sterling dollar pair with Tin Lao.
On the hourly chart, GBPUSD on Wednesday rebounded from the support zone, up 1.3357, 33.64. Reversed in favor of the pound and consolidated above the 1.3416, 34.25 zone. Thus, the growth process may continue toward the next Fibonacci level 76 at 1.3482. A consolidation below the 34.16, 34.25 support zone would work in favor of the dollar and lead to a decline toward the 1.3357, 33.64 zone. The wave structure remains bearish, as confirmed by yesterday's decline. The last completed upward wave broke the previous high as only on few pips, while the last downward wave broke 2 previous lows at once. The news background played a major role in shaping the waves we have been seeing in recent weeks. In our view, the background is not bullish, but certain events have still provided support to the bears. On the 4-hour chart, the pair turned in favor of the dollar and consolidated below the 1.3378, 34.25 support zone, from which it previously rebounded twice. Thus, the decline process may continue toward the 76% retracement at 1.3118. The chart picture remains ambiguous, with traders pushing the pair in both directions. At this point, we would advise paying more attention to the hourly chart. No divergences are forming in any indicator.
That's all for today. See you online soon.